All right, so we had a little bit of a breakdown today. We've been talking about this concept of a pullback, and we've talked about signs of what the beginning of a pullback would look like. Did we get that today? We actually got a few signs, but there was also some signs of a bullish pattern. So I'm going to show you kind of what, as bearish as it was, the actual bullish signals that we got in today's selling, and why that might lead to a bounce as early as the rest of this week. There might be some intraday moves one way or the other, but we'll see. I'm going to show you what those patterns look like. I'm going to show you what we'll see if volatility follows up on today's move with another bounce in volatility, and how far that would need to go for this now to be the intermediate pullback. And when we say intermediate pullback, what does that mean? Is that not only end a bullish intermediate trend, but does it begin a bearish one? Or is it just an exhale? So we're going to talk about that as well. And we're going to take a look at a stock that's had a really good run, that's not GameStop, that's not AMC, that's not any of these stocks, but has had its own little parabolic move on very light volume, and talk about how we might trade it as its sector itself shows some weakness today. So let's go ahead and get started. Today is Wednesday, January the 27th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. And you can see the pullback that we had today and how it aligns with the bullish moves that we've had recently. From an intermediate perspective, you can see we still haven't hit the 23% retracement level yet. So again, still pretty much noise. As noisy as it was, it's still pretty much noise until you break the 23% level. You did see on a near-term basis, so here's our latest near-term run down here. We have completely retraced the previous near-term run. We ended up with a yellow line today, which means we closed slightly below the 30-day moving average. We do not have light pink shading yet, which is the typical pattern. Probably we'll get it by tomorrow, though, depending on how, if we're bullish, how bullish we are. That intermediate line is going to be falling pretty rapidly here. The momentum line fell below into the lower reversal zone. The near-term line fell below 50. So that's actually a bullish intermediate confirmation signal with the yellow line there. So kind of as I mentioned today in class, in our trading room, that there's a pretty good chance that we just bounce up off of this tomorrow, considering how bearish it was so rapidly, especially with the VIX going up. We'll take a look at that more here in just a minute. You can see the Russell 2000 not nearly as bearish. It was down, but it wasn't nearly as bearish, not even close to its 23% retracement. And remember, this near-term rally was a lot longer. So, again, the S&P had retraced the entirety of its previous near-term run. The Russell is just getting to 38% of its near-term run. So you can see not nearly as bearish. And of course, the NASDAQ 100 also not getting down to its 23% retracement level either, and well above its 30-day moving average, with the same bullish intermediate confirmation signal. Oversold momentum line, near-term line falling below 50. So some pretty bearish days. But not necessarily like trend-changing bearish days. Not even necessarily trend-ending bearish days. Is this intermediate run done? You can see that was a pretty down day. That was a pretty significant down day relative to this one, and neither one of those ended this current rally. And we don't know what's going to happen here, but suggestion is the pattern suggests here that we can bounce up as early as tomorrow in a lot of these areas, especially with that yellow line forming up there. And again, if you look at the weekly chart, you can see here's the weekly market forecast candle as bearish. It is a little bit of an engulfing pattern, and it's not over with. We still got 2 more days left this week, but you notice it's setting up for a near-term a bullish intermediate confirmation signal as well, with the momentum line oversold, with a strong bullish posture, and the near-term line looking like it's about to end the near-term run that the stock has been on. From an Ichimoku cloud standpoint, you can see we flirted with the blue line. We're about right on the blue line. There's going to be some support there, just like the last time we dropped. we hit that blue line and finished the day there. You notice, as bearish as it was, we still haven't closed the trend quality down to zero yet, or the noise balance. So it's very hard to end a very strong trend like this, and it's looking like, you know, we can bounce off of this just as easy as we did the last couple of days here, or last time here in the beginning of the year, and the first day after the first day of the first new trading day of the 2021 calendar year. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That lets us know that you liked our video today and that you want us to do another video again tomorrow. If you like our videos and you want to let us know, great. Just click that thumbs up. And if you don't like our videos, of course, you don't have to click on anything. You don't even have to watch if you don't like them. Also, while you're down there, comment. What did you get out of our videos today? What stood out to you? What questions or comments do you have for me? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. You can click on that link to subscribe to our site for free. That will give you access to our Market Outlook forum, our community message board on our website. One of the things you get access with your free subscription. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our website, come down over here, check out our Market Outlook live video. So every day I do the Market Outlook. I also do a live video that same day at 3:30 Eastern time. You can access it here when you click on this image, or you can come here to Market Outlook Live Trade Review. This product is for all of our premium and our plus subscribers. Also, all of our trading rooms are for our premium and our plus subscribers. You can see tomorrow's Q&A session for Brandon. I do one on Saturday mornings. Those two are only available for our premium subscribers, in addition to access to all the class communities, forums, as well as all the premium tools that you get. Come down here, click on this heart. It opens up a new window. Click on this like button right there that pops up. Also click on this thumbs up. Also opens up a new tab here where you can click on this like button. Again, the more you do that, the more our content will be reached by more people. More of our followers will see our stuff because of how the algorithms work. The more engagements, the more people will see our content. It also benefits you because the more Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here while you're watching. Just hit that thumbs up there, and like I said, and then like both those Market Outlook posts. All right, when you look at our weekly chart here with today's selling, now we got a little transition candle. We're not done yet. The week isn't over, but we don't have a lot higher close anymore. We do have a higher high, but we don't have a higher close, and we have an upper and a lower shadow, and that's very typical of a transition candle. We'll see how it turns out by the time the week is over with, especially considering that we were 11 plus weeks into this run. It's about the timing of these things. You can see for the Russell 2000, we don't quite have the lower shadow yet, just a smidgen of one, long upper shadow, lower close, and then the NASDAQ composite. Again, not anywhere close yet. We don't even have a lower shadow on the NASDAQ composite. So, some little different scenarios for some of these indexes, but the S&P is showing the transition candle there. If I look at the 3 green arrow chart, we obviously have 2 red arrows, so the big jump in volume today. We don't quite have the third one, but we're about as close as you can get without getting. You can see the MACD has dropped well below its moving average, so Stochastics has dropped below its moving average, but we're still above the 23% retracement level here, and we're just barely crossed below the 17-day for the first time today, so we'll see if it holds, and we're just sniffing below the 30-day moving average, so we'll see how that pops out. Remember, when you look at small cap stocks, not necessarily the same story, so not nearly as bearish, and then you look at the Qs, and we're also holding the 17-day moving average there. So keep in mind that this isn't as broad of a sell-off from a depth standpoint as it appeared to be on the surface today. few things that stood out. You can see one of the biggest drops that we had, the first 2% drop that we had since the intermediate decline. In fact, it's kind of rare to get a 2% pullback without an intermediate decline. We did have a couple over here in June. There was about as much of an intermediate pullback as you can have without actually officially having one in June. But a 2% drop is pretty significant in that regard. We didn't have very much of a gap today, so that doesn't necessarily stand out. The directional movement index, we did get a jump in the negative index that we haven't seen since the last intermediate pullback, up above 30 here, easily above 30. The positive index is still well above 20. So again, not quite with the ADX2 still above 25. We're still kind of in bearish territory, so not quite a bearish breakout pattern yet on that. In fact, if you look at the Bollinger Bandwidth, this is our first day in the middle, right? So usually you get an intermediate pullback when you get in the middle and the lower quartile. Not always, but more often, like I said, that was about as close as we got to an intermediate pullback without actually getting one there. But we are really darn close to that lower quartile, so we'll see if that plays out tomorrow, or if the support at this little volume node here, which is right sitting on the 23% retracement, that will end up holding and moving us back in the other direction. You can see some of the pullback on some of these other charts too when you take a look at like the linear regression chart. This is just the 1-year chart. Let's take a look at the 5-year. On this, you can see how bullish we were, starting to move back towards the median there. And keep in mind as well, on a 20-year chart, as bullish as this week was, we're just barely dropping back below the second standard deviation channel. So it's not a surprise that there's going to be some weakness at some point. But again, when you're this strongly bullish, it's hard to break a strong bullish trend without some significant catalyst like we did there, but only because that was COVID, and that ended up being one of the biggest selling that we've had in that short amount of time ever. All right, so we are strongly, the trend is still very strongly bullish. It's not parabolic. The trend's not parabolic, so it's not like we're like moving up higher. Unless you're in GameStop, we're not moving up higher at a parabolic rate here. So we're okay. And, even the RSI and the CCI, you're dipping just a smidgen below negative 100 for the first time, but it's just a smidgen. And you were dipping below 50 for the first time, but we're not dropping below 40 yet. So there's still a very decent opportunity from a technical perspective to get a little bit of a short-term bounce here. When you look at today's volume here, you can see very significant volume. What you saw, above average volume over here with well above 1.5 times the average volume, with a pretty significant increase in the range, 8 points, not including the gap to the downside, which ended up being, let's see here, the close 383.79, the high 380, so about another 3 points. We're looking at about 11.5 point range. Of course, that's pretty significant when you look at it. Right here, 11.5 points is way up here. The volume was 1.5 times the average, so both those numbers are, starting, it's a pretty significant number, but it's so significant that more than likely there's a chance that can lead to, like I said, even this a really quick short-term bounce, especially with the VIX getting to where it got to today, up to that 100% mark, not quite to the 105% mark. If we follow through with this selling tomorrow and we do get to the 105% mark, then we know this is our intermediate pullback. We might not go down much further, but we'll stay down for a while. I do think that there is some potential for an intermediate pullback on the S&P that it's got quite a bit, it's got some room to run to the downside and still just be a move back down in support. So it's not like I'm doom and glooming here, but we're not. I don't think we're quite there yet. I think this is kind of a little bit of a warning shot across the bow, and we'll end up the VIX will end up coming down, potentially heading into the weekend before we start a new week here. So again, very small range, very small moves. As you can see, we got down to the bottom of the value area, but now we've got some support in this area, and we'll see if it ends up holding, and if we end up filling this gap here sooner rather than later before we eventually start our intermediate decline. The one that we're actually waiting for, not one that, like today, was just, a lot of selling got caught up into one day as we've been pretty sideways for a while. So to summarize the technical outlook, today was a pretty significant selling day, but also happened a lot of it really fast. So a lot of times this kind of sets us up, and there was quite a few actually patterns today that also suggest that we may get as early as tomorrow a quick little bounce up off of this low point. We'll see if we follow up today with today's selling with a bigger jump in volatility. Then this is it, right? This is the beginning of our intermediate pullback. More likely, and it's not 100% chance, of course, but more likely we're going to get at least a little short pop-up tomorrow into the end of the week, potentially with a new near-term run coming off of this low point that we had today. Again, a lot of it coming really hard, really fast in one day. And again, because we're between the 0 and 23% level, still pretty noisy. And that's the longer the bullish run, the bigger the gap between the 0 and 23% retracement levels, which means the bigger moves are still just noise. And so we have to account for that and realize that and not get caught up or worked up into it until we get a break of support. And so we're touching that today. We've got good bullish patterns that can come out of today, but if we continue to break down, then we know this is then we've started our intermediate rally. So what do you think? My guess is the odds are leaning towards the bullish bounce. Again, not 100% odds, but more likely we'll get the bullish bounce. That's kind of the direction I'm leaning towards. So what do you think? Do you agree with that? Do you disagree? Comment down below and let me know what you're seeing that suggests otherwise, whether you're a lot more bullish than I am or a lot more bearish than I am. Let's talk about in the comment section what charts or indicators you're looking at that would give you that opinion. All right, now let's take a look at what's driving the price action here, the selling that we saw today. So let's take a look at the asset class comparison chart. Of course, small cap stocks, but it really wasn't a small cap stock sell-off. As you saw, that had kind of a smaller down day. Let's take a look at just today alone. So we'll go into the 27th here and take a look at the selling. You can see small cap stocks, at one point in time, we're actually back to break even almost. At that point, the S&P was still down almost 1.5%, and the Qs were down almost 1.5%. Of course, the worst of the selling came late, and that's really when small caps participated. The Qs were down over 3% at one point before popping back up. Everything kind of popped up off the lows there. But everything, the emerging market stocks were down, developed market stocks were down, S&P was down, small cap stocks were down the least. Real estate was down because it had been doing well. The dollar was up today. Bonds were up today. So that's not surprising. Gold was down, but again, down only because the dollar was up, but still outperformed all these equity asset classes. So it was down on the absolute basis. It was not down on the relative basis, right? And you have to keep that distinction in mind when you're looking at gold because of its relationship with the dollar comes into play. Let's take a look at the euro US dollar here on this chart. You can see, we had hit that moving average for a resistance level and started to turn back around here. You notice you got back to a light pink or dark pink shading and a red line again. So we're stayed below the moving average, stayed below that 23% retracement, and is now working our way back down. And I've said before that I expected the dollar to continue this rally, so drop on the euro, rally on the dollar. So I expect the dollar to continue this rally during this intermediate pullback that we got. I expect we'll probably come all the way down here to about 1890. 118.90. So we're not, this dollar rally, but I don't expect the dollar rally to be trend changing, right? I think it will still continue to be, the dollar will still continue to be bearish on a long-term basis. Here's a long-term bonds. You can see light green shading, still got a red line. The intermediate line's way bearish, so it's still got a long ways to go The 10-year yield is coming back to its moving average. We've been on this bullish intermediate run for so long. We're about to get light pink shading the yellow line on the 10-year yield. Is that going to be the last one that you get before we turn over? And I expect that we'll get a little bit of a decline here too on the 10-year yield, as we are flirting with the 23% retracement level now, coming down to potentially 93 basis points there at the 38% retracement, that old high point. And of course, going all the way to 76 basis points would be through the retracement zone to the bottom end. So that's kind of the typical pattern, or the pattern that we're seeing set up, and that's where the 30-week moving average is. So you've got some potential. We're so high up above that, there's not a whole lot of support down to it. And if you look at the Bollinger Bands here with the volume profile on TLT, you can see that we've still got some room to go up here towards this, back to this old 23% retracement level, where that old volume node is, and still maintain a long-term bullish trend, bearish on bonds, but still give it room to rally in the short term, right, on any kind of breather. You can see we've been bonds have been in this lower half of the bandwidth for so long. We flirted with the upper half of the bandwidth a little bit. Only one day did we get in the upper quartile right there, but for the most part we've been to the downside, and we'll see how that continues to play out, and see if we bust through this to the upper quartile again, just at least, like I said, for a brief period of time, which would be kind of like a pullback in the opposite direction, right? A bounce up in bonds there. Commodity prices have also been very bullish. You can see they've been maintaining a very strong bullish posture here, above the value area, but you can see how they're kind of slowing their gains. They're still between 0 and 23%, so it's not, we're not anywhere close yet to any kind of decline, but you see the resistance level here on a 3-year basis. Let's go to a 5-year. There's our resistance level here, very big, significant point of control volume node up where we're at, and so that's kind of why we're stuck. We've had the good rally to get to this point, but now commodities are kind of stuck. And again, short term, I think we'll just kind of run into some resistance here in the short term on any kind of intermediate decline in risk appetite, only to eventually get through that by the time all is said. But it will take some time. It will take most of this year to get through this area, I believe, up towards the top of this value area by the time we get into 2022. All right, now let's take a look at the sector moves and how they're performing here. So let's go to our sector comparison chart and look at just today alone. There we go. Go to a 10-minute chart. You can see the biggest losers today: communication services, discretionary. Technology actually held up pretty well with some of these other safe havens. Industrials and energy also holding up pretty well too. But financial struggled, material struggled, healthcare struggled, and then of course utilities are down here. So everything pretty much down. Energy was the lone positive sector all day long on an intraday basis before it finally gave up its gains by the end of the day and finished down 1.25%. So pretty broad sell-off across big and little sectors. So we haven't had a broad sell-off in a while. I've shown you this chart before. This is how many stocks are above their 200-day moving average, updated for today, and we're still the 20-day moving average of this line, a smooth line, is still up to the 86% mark. And if I were just to look at it on an absolute basis, we're down to the 84%. So, I mean, as bearish as we were today, we're still very heavily skewed sentiment-wise to the bullish side of things. So, if we think today was all the extent of the intermediate pullback, we're going to be wrong with that. Let's take a look at the 12 grid for the sectors, and we'll come over here. And you notice, again, XLK getting the cluster yesterday, pulling back, the XLC getting the cluster yesterday, pulling back. The XLY also pulling back to its moving average. XLB has dark pink shading and a red line now. XLI has dark pink shading and a red line. XLE has a red line and close to dark pink shading. And then XLF has light pink shading and a yellow line, but getting pretty darn close too. And you can see XLP has dark pink shading and a red line. So we got multiple sectors that are relatively bearish here. And then healthcare, financials are a little bit more, have pulled back more than these areas still holding up very strong. And as I mentioned to you before, once we're done with any kind of, again, risk, intermediate pullback and risk appetite, I still expect these three sectors up here at the top to be our better performers, whereas some of these other sectors, healthcare showing a lot of weakness here today on a relative basis, breaking, being so far up above the moving average, probably, only discretionary is probably the furthest. But then breaking all the way down and getting below it today, whereas discretionary stayed above it. So pretty significant selling in the healthcare sector today. So for our trade idea of the day, I want to take a look at Eli Lilly. Eli Lilly really has gone parabolic here, getting well up above its 30-day moving average. In fact, this is one of the most overbought clusters that it's had in a long, long time. And when you consider it's an overbought cluster, number one, and number two, we are that far above the 30 and 200-day moving averages for the stock. So very significant overbought cluster coming off of a well-established intermediate trend, and again very far up above the moving average. Obviously, we're getting some kind of evening star candlestick pattern here. A little bit of a bullish intermediate confirmation signal as we're a smidgen below the moving average there. Well up above the 8-day moving average still. So even despite the pullback, you can see we can go from 0 to 23% and still be noise, right? And the and still be above the 17-day moving average here. But the MACD histogram is rolling over. The stochastics is still relatively high. Look at the RSI and the CCI as well up above 80. It got to at one point. The CCI got up above positive 400 here on that strong move. So we've had this explosive move to the upside on Eli Lilly here. Not as explosive as in some other stocks, but a relatively explosive move. The directional index, the positive directional index moving up as much as it did, the negative index getting as extremely low as it did. You look at the Ichimoku cloud and look at the red line as high above the price it is. It's hard for this red line to get away from the price and stay so far up above it. It usually brings back down into that area. You can see how high the trend quality got. We got that high over here. Just to kind of give you some context. We got that high over here as well, and we were pretty darn high as well on the, not as high as we were now. Well, in fact, here let's do the log scale. There we go. So in this area, we weren't as in fact, the price was high up above, but not as high as it is now. But then you can see when we got this high on the trend quality index, it was hard for it to stay this strongly bullish. It was like too far, too fast, and not a lot of volume. And when you look at the Bollinger Bands here, you can see what I'm talking about. Not a lot of volume at all holding us up above the value area, which is way down here at the bottom of the Fibonacci retracement zone. With 38% all the way down to 180. I mean, that's a pretty easy move to make to the gap with no volume to hold it up whatsoever. So, and then you look at the long-term crossover chart here, and you can see, we're way up here. The PPO is way up here. We're well above that 200-day moving average, and again, hard to sustain when we've gone that parabolic. So what I decided to do here is okay, well, let's take a little small speculative risk trade on this. Again, considering trying to take advantage of that lack of volume here is what I'm looking for. We got the evening star candlestick pattern, the very strong overbought cluster, the evening star candlestick pattern, all the overbought indicator, the extreme indicators, as well as just a move to support, right? I mean, it doesn't even have to be a bearish move. It just is a move down to 38% retracement is all. And if we can get that by February expiration, because remember we went up as you can go down as fast as you can go up when you've got no volume here. If we can get that by February expiration, then I thought, okay, well, let's go ahead and take a look at buying it out of the money put 192.5, selling the 190 to help fund it. You can see we did this in the Market Outlook Live video, so we've already been in it and it's already moved down from where we got in that much already. So we're up a little bit on the trade, and then this is our maximum gain at 190. Remember, so all we need to do by for it to do by February expiration is get to 190, and you can see 190 is just barely below the 23% retracement. 186 is this one standard deviation by February expiration. So that's not an extreme move at all, but if we get one, we get a good return for the risk we got into this trade. And we've got such a very small risk that we can keep it to 200, 250 bucks really easily. And $200 risk for $1,700 reward is a pretty good risk reward trade to shoot for here on a speculative directional trade. All right, so that wraps us up for today. As always, you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Remember, you get access to that with your free subscription on our website. Open up any new threads there. Take a look at what other people are talking about. Reply to other people's threads. Let's keep this conversation going in between videos. As always, thank you for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon, as well as on Twitter and Facebook too. And then comment on our videos. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.